If you run an earth moving or civil construction business in Australia, you are operating in one of the most capital intensive trades there is. A single excavator can cost anywhere from $80,000 to $500,000 depending on the size and specification. Add your dozers, graders, compactors, dump trucks, and support vehicles, and the combined value of your plant and equipment can run into the millions. That is before you factor in fuel, parts, labor, and the reality that commercial clients often take 60 to 90 days to settle invoices. Getting access to the right finance at the right time is not a nice to have in this industry. It is often what determines whether you can take on a job at all. So let me run through what is available to earth moving businesses in Australia. The most important finance structure for this industry is equipment and asset finance. Whether you are buying a new excavator, replacing an aging dozer, adding a tipper truck, or upgrading your support fleet, asset finance uses the equipment itself as security. That means significantly better rates than an unsecured loan, terms from 2 to 7 years depending on the asset, and repayments that align to the working life of the machine. For most earth moving operators, this is how every major plant purchase should be structured. For working capital, covering fuel and parts costs between project milestones, bridging payroll during a gap in contract payments, or taking on a job that requires mobilization costs before the client pays. An unsecured business loan gives you between $10 and $100 and $50,000 without needing to secure it against additional assets. Approval typically comes back within a few hours and funds can be in your account the same day you sign. If your business invoices builders, developers, councils, or government contractors and waits 30 to 90 days for payment, invoice finance is worth knowing about. You can unlock up to 85% of the value of outstanding invoices immediately rather than waiting on slow paying debtors. The lender collects from your client when the invoice falls due. For earth moving businesses doing commercial and government subcontracting work, this can completely eliminate the cash flow pressure created by long payment terms. On approval, non-bank lenders assess your application primarily on your last 3 to 6 months of business bank statements. You do not need to own property. You do not need a perfect credit score. If your business is generating consistent revenue, the process is faster and the eligibility bar is lower than the major banks. For larger plant purchases above $150,000, lenders may require the asset as security or request additional documentation, but property ownership is not a standard requirement for most working capital facilities. Always compare the total repayment amount in dollars, not just the interest rate. That is the only number that tells you what the finance actually costs. The link in the description takes you to a free loan comparison tool. 5 minutes, no credit check, multiple lenders.